Hey guys, welcome back. We're looking at the Swiss franc, Japanese yen crossover. We're going to do again a full analysis of that pair, and to make sure that we're coming out on top. We'll start off with the monthly chart, see what that monthly chart is actually doing. So from 1994, it's done sort of. It did this for a bit, and then it broke out to the north. Generally, and I say that, let's delete those. Sorry. There's nothing worse than seeing red charts. All right, so from 1994, there was that bit of ranging. It did this, it came up, it went down, went through that range, went back up, came back down, went up, kind of almost came down, and around 2011, I would say from about here, it shot up. At the moment, is showing downward moves at the moment. Okay. Now, to understand what that means is every time you're in a range, more than likely the market comes back and does this. So it'll go up and down and up and down and up and down. So if it breaks out, it tends to do this. It comes back, tests the backside of that range, and then shoots up. That's it tests the backside and then it shoots back up. So I think more than likely that's what you're seeing right now. Especially if it's broken through. So we're seeing at that point here, you're seeing a bearish candlestick formation, which is dark cloud cover, bearish engulfing, whatever you want to call it, is a test of that bearish candlestick formation, and now you're seeing a plunge down. So we're expecting that this market to potentially head all the way back down to, well, another 1,200 pips or thereabout. So let's see what's happening on a smaller time frame. Let's look at the weekly. Okay, on the weekly, we'll just look at that up move, see what it says. Okay. All right, 2 to the left. There we go. 1, 2. 1, 2. Okay, so it's just hit a D as well. And here we go. Oh, I don't know what happened there. Okay. Okay, let's just mark this up quickly. Yeah, see the market do this, this, that. There we go. All right, so at a minimum, we're gonna see this market come down roughly around here. I'd guesstimate roughly around here. Potentially here, but roughly around here. At a minimum to the 382. Absolute minimum to the 382. So absolute minimum, we're expecting it to move another 278 pips. Alrighty. All right, so we know that on the bigger chart, we said potentially with all this past resistance, we're expecting it to come down roughly around here, which works around 815 pips. We did see something about 1,200 pips, so I'm guessing, let's just minimize this quite small. There we go, all the way down here. But we need to think of all the levels of past resistance and not just one. Okay, so I'm guessing what was our safest one would be at that 382. If we're gonna do that, so another 200 pips. We're looking at also around 108.21, and this one at 104.77. So we do have quite a lot of potentials. If I were trading this on this chart, I would trade all the way down to this past level of support and resistance. Oops, that's alrighty. Because there's a lot more interaction at this line. Oops, at this line, it covers both candlesticks hitting it and falling through. So there's a lot more interaction with this line right here. So I think on the smaller time frames, I'll look for more than likely that level of resistance. Okay, let's go to the daily. Okay, all right, let's look at this down move, because we know we're looking for down moves or downward moves. Okay, we're in a down AB. The market has hit a it hasn't hit a 786, so we're expecting it projected D to be down here. So we're looking at this marker and we're saying here, okay, it's come and hit and it's moved consistently down. So we're expecting it to move approximately, let's see, 287 pips to hit that D on the daily. All right. Do you have any entries on that daily? I can't see any. I'm betting you guys can, but I can't see any entries at the moment. I see a bullish candlestick formation right here, which says, ooh, maybe, but ooh, I'm not sure why it's changed all color. Okay, I have no idea why it's purple. Okay, let's just leave it. Oh, it's come off on its own. Okay, I've seen that bullish candlestick formation right here. The stochastics is showing a little bit of indecision, obviously, because I see where it might be potentially going. Okay, so we're seeing it and we're looking at it thinking, okay, well, probably not right now. We're looking for bearish candlestick formations. We don't have an opportunity on that daily, so let's go down to the 2 hours, see how that works out for us. Okay. All right, this is our highest high for the moment. Oops. Alrighty, cool. Let's do our favorite fibs. That tells us where we want to go. So, slight relation to Alice in Wonderland. Click the heels. All right, let's put in our lines. All right, make sure we're always sticking to good habits. All right, let's hit that D right here with a shallow bounce. Okay, so you know what it went fast and aggressive, and there we are. Okay, and here. Okay, and we're in this down AB. makes sense because there's a lot of past support, future resistance here. There was a lot of interaction with that line. Came in, came above, gave a nice bearish candlestick formation right here. Again, went down around a 2.7, just about here, and then shot back up again. Again, giving that little interaction around this area. Massive bearish candlestick right here. Does that mean a range scalping opportunity? There probably was and probably is now on maybe a 15-minute or so. At worst, I would say we would get in. Oops. At worst, we're looking at 34 pips. At worst, our target would be, sorry, that 2.7, and more than likely, well, 98%, it will more than likely come down to our 618. It's a technical hold tight. It has had a bounce off of. We are mindful that it might be in a range, which means it might just bounce into between those for a while. But for the time being, I think if I had gotten in on this one, which would more than likely be my entry, because I don't like a 382, so I'd ordinarily go for something around a 6.8. I would even go down to 7.86 down here, just for a better entry on that trade. But for now, it looks like it's in a bit of a range. It might move down a few pips. So yeah, potential scalping opportunity on this trade, heading down to the base here, maybe today or tomorrow. Yeah, another 54 pips. Yeah. Okay. Well, that was my that is the analysis on our Swiss franc JPY. We're expecting this pair to move down, more than likely to test the backside of this trend line on the monthly, to come back at least to a 382 or deeper on the weekly. Again, they're all retracement trades, so again, be mindful. On a daily, it's in a down A, B, C, D for a couple hundred pips. On the daily, on the 2 hour, we're looking at a down A, B as well. Every trade is showing on the stochastics that it is heading down. So we're looking for downward opportunities here. I wouldn't go in on this trade at this point. For me, I don't have a good equity trade. 115 pips for 106, well, not even 106. So for me, equity-wise, I wouldn't get in on this trade. I would probably put in an entry around here, and hope that it gets in a little deeper, and then put my stop up here, and put then. If it's shy of the 786, I'm expecting it to go all the way down to the 618. So I can put an entry order for that, but for the time being, I wouldn't dare. For me, equity-wise, 175 pips for the sake of 47. For me, is 2 to 1, 3 to 1. That's sort of the type of risk-reward I look for when I trade. Alright guys, I hope this was useful. Thank you for watching and catch you soon.